Thank you, Carl and Sarah, and welcome to the Halftime Report. I am Courtney Reagan, and today we're Scott Wapner, front and center this hour, riding the record rally. Stocks touching fresh all-time highs as we gear up for another very busy week of earnings. Our investment committee is standing by with their playbooks. Joining me for the hour, Joe Terranova, Amy Raskin, Steve Weiss, and Sarat Sethi. Let's take a quick check on the markets. We are higher here across the board. Some fresh records this morning. Russell 2000 also higher to the tune of 0.75%. That's actually leading the way, but the Dow higher by 0.5%. NASDAQ Composite is up by 0.6%, and S&P 500 trading above 6,330. It has been quite a run since, obviously, the April lows that we talk about so much as sort of this touchstone. But, Sarat, it doesn't feel so good. I mean, when I look at the numbers and then I think about the psychology of the market and investors, how do you square those two? It seems like there are so many outside influences that could be pressuring this earnings season.
Yeah, and I think you're absolutely right, because it's not like we're in this feel-good thing that isn't all clear, right? Because we still have the tariff overhang.
Yep.
We still have a couple of wars going on internationally. We also look forward to say, how is the deficit going to be? What's going to happen at the Fed? So the market's climbing this wall of uncertainty, but at the same time, what we're getting is stronger earnings. And I think that's what's going to keep on driving the markets. Financials had a really good quarter. They had really good things to say about the future. That was good. The underlying demand for software and chips has been good. So you're seeing money go there. You still have sectors of the economy that aren't performing well. I mean, look at healthcare. You know, look at some of the REITs, the utilities, et cetera. So I think you've got the defensive parts of the markets that haven't really partaken, and maybe that's kind of an area that people will start either hiding out or kind of being careful. But it's also gotten to the point where some of these stocks have run so fast and so quickly that you're projecting the earnings growth to be a lot potentially better than we could be having.
Yeah, I mean, Steve Weiss, Morgan Stanley's Mike Wilson, who we obviously follow very closely on the show, he's got a call out and he says, look, while there should be some consolidation during the third quarter, we actually think dips are meant to be bought. So he's putting his chips in. Is that smart?
Well, I don't think that's anything that's brilliant. I mean, you know, look at how many dips we've had in the market. The market's trading an all-time high. So dips are always meant to be bought. It depends. It depends on your personal constitution. Like, are you willing to ride through the peaks and valleys? And there are many more peaks than there are valleys. So, but I think what he's talking about and what others are talking about has been, it's so long since there's been a meaningful correction, meaning close to 10% for a sustainable period of time. Because since '08, they've all been V-shaped recoveries, and that includes what happened in April with tariffs. But there is a disconnect between what we read in the headlines that grab our attention and what's happening with companies and with the markets. Markets are actually okay. So at any point in time, no matter the market, no matter the conditions supporting the market, you're suspect to or you're subject to a potential decline of 5 to 10%. So yes, they should be bought, but it depends where you buy it. So not all stocks are created equal, except in the equal weight S&P. But for all intents and purposes, some have better fundamentals, some have more wind in their sails and more tailwinds than others. So I think you stay with the winners, even if they get to overvaluation levels, as I believe we have with Meta and with Microsoft and with NVIDIA. Those valuations should be fairly sustainable. And if they're not, if they do take a hit, it's a moment in time. So you just have to be aware. But it's not worth selling what are your core bottoms-up positions because you believe that there's a correction imminent. It's best to sit in your hands, and maybe if you're convinced of a correction, sit in your hands with cash and deploy at that point.
You know, Amy, August is right around the corner. What is it, July 21st, right? So it's 9 days away. August used to be kind of quiet, but we've got this August 1st deadline that's hanging out here. That obviously is something to pay attention to. And then Goldman Sachs, Tony Pasquarello is talking about the summer liquidity conditions taking hold. Maybe that means risk reward are shifting. How do you think about the month of August, this impending deadline, even though we're going to get earnings reports, hear about the company's fundamentals in the meantime?
What I think has been so interesting is fundamentals have been good. Companies have been beating. As Sarat said, financials, I listened to all those calls, very optimistic. Stocks didn't do anything. Stocks actually traded down a little bit. So I actually do think there's a lot of good news baked into earnings and into earnings seasons. I mean, even Netflix as well, like good numbers or maybe missed a little bit. The stock didn't, sold off. You're seeing that with a lot of sort of good results. Novartis, great report. Stock sold off a little bit. It had run up into the quarter. So I think, I do think we're going to be in this little bit of a digestion period, that there is a lot of good news baked into some of these stocks already, that we have had this extraordinary run from the April lows. We are going to get into the quiet summer months. And so you're seeing a lot of volatility, a lot of trading, but relatively lower volumes, I would expect. And then you get September, which is usually not a great month.
Right.
So I would think that you're going to go into a little bit of a consolidation period right now, maybe a little bit of weakness. I wouldn't be surprised. But it will be really interesting to see. I do think you're going to get a lot of good results for the second quarter off lower numbers, because at this time last quarter, the companies were able to bring down their numbers a lot. We were in the throes of the tariff tantrum.
Sure.
And so you did get lower numbers, but it's interesting to me that you're not getting great reactions, even from blowout numbers like Goldman had.
Well, we started talking about August, and then you brought it to September, which then made me think about the Fed meeting, and we haven't even talked about what's going on between the president and Jerome Powell. Obviously, I know that's a committee that makes these interest rate decisions. It's not just one person. We saw maybe a small market reaction to the idea that Jerome Powell would be taken out of his job by the president. If that happens, do we need a position for it?
Well, I think the effect of that would be felt in the long end of the curve and also for the U.S. dollar. But I don't see that's a major issue. First of all, I don't think it's going to happen. I don't think it's going to happen. I don't think it has to happen. I've said on air, I believe that President Trump can just sit back and wait, because I think the eco data will come his way to where the Federal Reserve actually begins to lower rates once again. So, look, the market is constantly climbing the wall of worry, as everyone has already identified. This is a remarkably resilient market. But the most important thing about this market is it's a V-shaped recovery. And a V-shaped recovery is very difficult for human beings to emotionally engage in, because it moves so fast. And you're always skeptical. You're always skeptical when it's moving that fast. So if you don't believe me, just go back and think about history. Think about in 2018, in the fall, when you had that very sharp sell-off and then the V-shaped recovery on the other side. What did we do in 2019? We basically gradually walked the stairs higher and higher. The same can be said during the pandemic. V-shaped recovery. You walk the staircase higher and higher. 2022, it was a more prolonged sell-off, so you had more time to process what was actually unfolding. This was fast. This was quick. People incorrectly moved to the sidelines in certain instances, more for institutions than the retail community, and the skepticism is going to remain, and it's probably one of the reasons why we've got the resiliency. We're overcoming the wall of worry, and now the next thing in front of you is the technology earnings, because they're going to start on Wednesday with IBM, Tesla, and Alphabet, and the technology earnings could be a catalyst in either direction for sure.
Well, go ahead.
To Amy's point, what's going to be really interesting to see, the tech stocks have run so much. Even if they beat, we'll see what the stocks do.
Well, and that's what, and BTIG's
Right.
Krinsky actually says the NASDAQ 100 has now gone 60 trading days without closing below its 20-day moving average. The second longest streak in history back to 1985, and the longest was ended in early 1999. So if we're talking about history, that makes me nervous. Should it
that
not?
was a V-shaped recovery too. Before, in 2000, you had this V-shaped back, and then you had the correction from the March low. You didn't quite get to the high again, which we did this time, but that was sort of the beginning of the end, actually, after that.
I think the question is, what do you do? What do you watch for as the indicator? What's your indicator to tell you, is the market rolling over? And I think there's no industry that better reflects the recovery that we have experienced than the semiconductor industry. Remember, if you think about where the semiconductor industry was coming into 2025, the semiconductor industry had kind of lost some of the bullish sentiment, some of the bullish positioning. It went towards software. People said, okay, you're making the AI pivot. Now you have this remarkable comeback, and you have companies. I know we could talk about NVIDIA, but how about Broadcom? Broadcom is nearly $1.4 trillion in its market cap, marching to an all-time high. You're seeing that type of bullish momentum expand beyond there into the semi-equipment names. Lam Research, I think today, touched a new 52-week high. KLA Corp near a new all-time high. It goes beyond that. I've talked on the show over the last several weeks about the momentum in AMD. The momentum was building remarkably strong. This stock, Courtney, it's up 100% from its April 8th intraday low. We're going to hear from Texas Instruments on Wednesday. Texan is near an all-time high as well. So I think the SMH is absolutely your tell here as we move forward. Look at their earnings, see the reaction. I think that's the ultimate indicator of the ability for the market to continue to climb the stairs higher and higher, or, to your point, if we're going to get this correction.
Well, my question is, what are the CapEx numbers from the hyperscalers going to be? That's what's going to drive everything.
It should be strong.
Well, the question is, they've been raising by 10, 20% each quarter. Are we going to get that again? And if we do, what the reaction? That's going to power the semis higher, if that's right. But then my question is, what do investors in those companies react? How do they react to that increase in CapEx? Because you're already starting to hear people say, you know, the free cash flow numbers are coming down. The spending is actually starting to impact the free cash flow numbers of even these huge free cash flow earnings. So I think that's going to be something really important to watch, is are the CapEx numbers going to be raised again?
But let me try to answer that partially.
Please, I'd love to hear. I'd love to know.
I mean, it used to be, look, you and I have been this long time working together, and it used to be that in front of major CapEx cycles, that you stayed in the sidelines. And particularly for when product changeovers with software companies, you know, or tech companies,
sector.
You get out.
Any capital spending cycle has been sold, not bought. This is very different.
And those were good moves because it would take a while. You'd lose business because, you know, who's buying a product now when in the future? I think it's a little different with these companies because AI is moving so fast that the big question 6 months ago, even 3 months ago, are they going to make money in their CapEx? And when are they going to make money?
And
do I want to stay there?
Anymore.
Right.
But at some point they will. At some point you have to earn a return on this money.
I think they could, but I think it goes back to what's driving the market. What's driving the market are not people like the four of us here who've been in the business for decades, right? It's people that are investors, a lot of retail. They're buying index funds. That drives up the components. So it's a completely different market. And staying on the sidelines and asking those questions, and you did see pressure on Meta and Microsoft a few quarters ago because, wow, they're spending too much money. I think that at this point, that's old news. I'm not saying whether it's right or wrong, but it's old news. And right now, people are convinced because of AI being the fastest adoption of any technology in history, that the payback will be quicker and that they want to be there because they believe in the growth that'll come from the CapEx and are unwilling to time it because guess what? They're also missing out on the moves of the stock. So until the stock starts saying, hey, no mas on that, I think it's going to keep going like it is.
But the tell will also be is when the hyperscalers say we're cutting back, but our earnings are going to grow because that's when the return of investment is coming out. And I think if you get the momentum going, and Joe, to your world, if the software stocks start picking up because they're actually investing, you know, some of the Workday, Salesforces haven't done anything, right? Because they're the ones that people are not giving the benefit of the, you know, they're saying, hey, you need to prove it. So if that handoff happens or they all work together, you could see another leg in this bull market.
If you're a bear, what you want to see happen is that the CapEx is there. You give the confidence that the CapEx will remain there, and then the reaction's bad. The reaction symbols some form of exhaustion in the stock price.
Market.
If you're a bear, that's what you want.
Well, that's what you, and at some point, though, you have to get a return on the money. It might not be this quarter, it might not be next quarter. I completely agree with you. That's what the market is saying. But at some point, somebody's going to look at these companies. I mean, and it happened, as you said, with Meta and the metaverse, and you're spending too much. At some point, some investors are going to say,
had it for a while.
what's the return? You're spending hundreds of billions of dollars. Your revenue is X, or you're not even
meantime, you're right. But in the meantime, they're hiding that.
With their cash flows from their other businesses.
Exactly. So, and companies like Salesforce, et cetera, I mean, the market assumes their business models are in jeopardy from AI. So they're spending to stay alive versus Meta is spending to grow. But it is troubling. You take a look at Netflix and all these analysts who had to get out in front of the earnings and raise their estimates and raise the price target. That did nobody any favors. Because it was a great quarter and a great guide. So then you make up stories, well, why wasn't this way? So people start seeing ghosts and they sell it.
Well, I think that's happening in a lot of companies right now.
But even if you told me Meta's going to miss this quarter, right? What am I going to do about it?
Well, I think
I'm going to do nothing about it because I'm not going to pay taxes.
I agree with you, but I don't know that fundamentally you can anticipate that the spending is going to go away because we've had improvement in a lot of conditions.
There's no assumption of that.
No, it doesn't have to go away. The question is, but for to meet these semiconductor estimates, it has to keep going up.
That's the reaction, but I think you have to go in and say to yourself, okay, look, conditions on the ground fundamentally for semis have gotten better, right? There's been an improvement in the tariff environment, which was the concern coming into the beginning of the year.
Right?
That was the overhang coming into the year.
That was the governor on these stocks. Your demand externally ex-U.S. was going to get reduced.
And then you have the president and his administration in the Middle East announcing various deals. So you have to anticipate you're going to get some strong fundamentals.
And that's where the complacency of the market comes in. Because, yes, some of the issues with semiconductors relating to tariffs has gone away. As we know, it doesn't mean it won't come back this afternoon or tomorrow. But you take a look, but the worst of it's done, and the market's complacent about it. Take a look at Taiwan Semi. That stock bottomed about 150, 160 in April. It's hitting a new high virtually every day now. Phenomenal quarter. And they're arguably in one of the most tenuous situations, being in Taiwan, their principal operations, with China getting ready to invade Taiwan, supposedly at some point in the next 2 years.
We're going to move on to Mag 7 real quick, but I want to talk, Amy, about your trimming ASML.
So yes, we did trim ASML going into the quarter. The stock, I should have trimmed more. The stock had a very bad reaction. They pulled 2026 guidance. Just saying uncertainty, and they don't know. And again, the stock had run a lot, as did all the other semis since April, and we just thought it got a little ahead of itself. And so I did a lot of trims before the quarter. That one worked out. Others didn't. So we can get to that later.
That's the way this goes, right?
Yeah.
I want to talk about Alphabet because that's what's going to kick off earnings for the Mag 7. That's on Wednesday. And Sarat, you sort of brought that up. You were talking about Google. What do you think we need to be paying attention to here? And obviously, I mean, look at this stock.
I mean, again, it's what is their free cash flow growth and the capex, but also YouTube. I think the YouTube
seems underappreciated for what it's doing.
And if you look at the incremental growth of YouTube compared to all the other peers, it is growing faster and faster. Also because YouTube's got user-created content.
Yes.
Right? So a lot of their cost of goods sold, you saw what happened with, CBS cutting back some of their shows. YouTube's got user growth plus cost of content lowering, and then the other businesses. And I think of the Mag 7, in our view, Google's one of the cheaper ones that has a pretty good growth rate, great cash flow. And if you see some type of moderation of any type of capex cutback or growth, that stock is really could reflect it.
I think it is the cheapest, and the question would be, why is it the cheapest?
Right. Because of the growth rate and the
because of search.
capex.
That's the question. Search. And does search get cannibalized?
Search, right.
And Amy, you own this too. No trimming here.
I own it too. No, I haven't trimmed it. I agree. YouTube's a great asset. Waymo's a great asset. I think search is going to be around for a long time. Although I do think we haven't added to it, and we're kind of underweight because I do think it's going to trade off what is search, what's going on with search, and the numbers are probably search is vulnerable to AI.
Do you think that you're getting Waymo for free? Is that part of the valuation right now?
You're free. I mean, compared to Tesla's valuation, I think Waymo is undervalued, but it's very hard to put some of the parts together accurately. I think Waymo is a great business for them, and it has long-term growth potential, as does YouTube. Right. But I think for the near term, it's going to trade on search, and it is vulnerable. Ironically, Google will do better if AI slows down because that's the franchise that's going to get cannibalized the most.
Oh, that's happening.
If you don't think that, then that's your view on Google.
Well, let's move from Waymo, Google, right to Tesla. Then Tesla also reporting on Wednesday. Gosh, there's so much you could say here. I mean, Tesla's IT exec has no traditional car sales experience. He's running sales. This is according to Reuters. You've got Elon Musk saying, "I'm sleeping in the office again.
7 days a week.
7 days a week.
my
kids, I'm sleeping in the office again." I guess if you're a Tesla shareholder, you like that. But
sure. I mean, if you're a Tesla shareholder, you like that.
Maybe not if you're his family, but
ultimately, the fundamentals have to represent that revenue is going to see its trough. And the decline in revenue has been the challenge for this company. Now, listen, it has had a nice recovery over the last several weeks from when we opened up on that Monday morning and it was trading down around 292. We're up to 328. I think that's technical in its nature more than anything else. But I think you want to hear on this earnings conference call that exactly what you said. Elon Musk, 7 days a week, focused on Tesla, ignoring the nonsense in Washington, D.C. This is his priority. And okay, how are we going to revive the growth to get it back to what investors knew it to be 18, 24 months ago?
Yeah, see, the thing with Tesla is you never can convince a permabull on it that it's overvalued, that Musk doesn't care about corporate governance, that Musk is, doing too much. Remember the conversation about Jack Dorsey with only 2 companies?
Right.
And you'll never convince a skeptic like me that I should own this stock, and the only thing that stops me from shorting it is the cult that follows it. But you can't justify a capital-intensive company that's getting laid into, and it's a big market, robotics. That's a pretty competitive market at this point. Sure, it can be a business for them. The losses will be there. And robo-taxis, Waymo owns that business now. Lots of room there, but they're pretty far behind. But they don't care. They still look at Musk as a god who knows all, does all. The guy's a genius, but he's a great CEO. We've seen not so much, right? But it keeps going. And I'm not worried about people leaving there. As I mentioned last week, Jim Chanos kept a whole spreadsheet of everybody that left. It's legion. We all know it. One of our companies, we've got 3 former CEOs, 3 senior people that were at Tesla. They're everywhere. So either you love it or you don't. It's really even not worth talking about, in my view, because it defies fundamentals. Fundamentals don't care. Now, it's an important company.
$1 trillion company.
Exactly.
Right, I was just going to get that.
Ignore.
It's still $1 trillion company, so of course it might be in the conversation, but I think everybody spends way too much time on it.
I think the bar is pretty low going into earnings, which is interesting. I can't remember a quarter where the expectation was this some new.
Generally, that's the case when your sales are down 40% globally.
Fair point.
And I think with Tesla, people are looking past the cars. They're looking to the robots. They're looking to the self-driving cars. And that's kind of giving a halo effect to a lot of the other parts of their competitors as well, right? It's like, you put a coffee shop in somewhere and, the Starbucks puts a coffee shop and the other coffee shops do well. So it's kind of interesting.
It's tough to your point. It's tough to value a dream.
Yeah. And to go against Tesla as a long investor or short investor, it's very hard to do.
Yeah. Absolutely, for a number of reasons. Well, I want to talk about Apple because we've got some wide ownership here. Obviously, that's next week, but it was reiterated overweight today with the 235 price target at Morgan Stanley. We've got Joe, Amy Surratt. You all own this. Amy, what do you make of Apple going into this print?
I'm not sure, honestly. We've owned Apple forever. Again, we're not overweight the stock by any. We're actually underweight. I actually think this one has gotten probably unfairly hit on not being in AI yet, and I think their sales were going to be just fine. But I also don't see what sparks a new cycle, a new iPhone cycle. I just don't see that happening. So I think this is going to be fairly humdrum.
So what do you make of services and what you should expect there? If AI isn't there yet, what else can they offer
I think
us?
that's the advantage Apple. AI is not there, right? I mean, all the people spending money in AI not getting a return on investment. They're kind of
you don't need to be first. You just got to figure it out.
And that's always Apple,
end.
right? That's all.
Right?
They're never first. Maybe the foldable phone comes in, but their service revenue keeps on going. Their cash flow keeps on increasing. They buy back shares. It's just the growth. Where is the organic growth? Where is the top line growth? What's the next new thing? And the overhang is still there of tariffs and the Dow, also the Google and the DOJ. So you've got some of that. It's not a cheap stock in that sense. So there are, what are the short-term catalysts? But it's also, it's hard to sell. Why do you get out of it? If you've got a big position in terms of cost basis is low, or maybe something comes down the pipeline.
Overhang is a strange word in my view to use for this stock because I've got a stock selling at a multiple of a company that actually grows, whereas they haven't had growth for years, aiming for growth. So I think it's not been an overhang. I think it's actually, the market's been very generous with the valuation here. And their lack of innovation, which I've been highlighting for a decade, including when the guys with the ponytails used to guffaw at it, now it's finally coming home to roost, right?
Joe, you own this in the Joe T. I'll give you the last word.
They pay you to wait. And that's the reasoning behind being a long-term investor in the company. The ecosystem is undamaged through all of these challenges that they have in delivering, and the software strategy, the AI strategy, hardware they seem to innovate ultimately at some point. I'm not going to dismiss the premise that the revenue growth isn't there. It's not. It's not there, like it's not there at Tesla. But they know how to keep the shareholder in their seat, and more importantly, they know how to keep the user of their products in their seat as well. The retention on the ecosystem is unrivaled, I think, anywhere in the corporate environment.
That's true. Who's given up these, right? You just add more and more and more. Well, coming up, let's get to our calls of the day. We're going to start with Uber, since we were sort of in that space before, talking Waymo, Tesla. Let's talk about Uber. Obviously, a number of business lines there, but the target was raised to $115 from $95 and reiterated overweight at Morgan Stanley. They see the path forward for ride sharing and the Eats booking growth. Joe, I'm going to start with you. You own this one.
I believe they report on August 6th. It's going to be an important report to understand if the strength of the balance sheet continues. And that's what I've been focused on. This company several years ago made a remarkable turn in their financial conditions. Free cash flow generation went positive. It's accelerated from there, and it's allowed them to do the things that they need to do in terms of diversifying the business model. Not all about mobility, going to other areas like delivery, obviously including AI in the story, and ultimately having partnerships like they do in Atlanta with Waymo. So the company has technically very strong momentum. It continues to hug all the major supportive technical moving average lines. It looks like it wants to make that run ultimately at 100. I'm not so sure it's going to do it ahead of earnings, but post earnings, if you hear what you need to hear, I do think above 100 is a price target that would be not so much the ceiling, but will ultimately become the floor. You could be talking about support at that level.
Yeah, I mean, it's right. It's above 90 right now. Can it get to 115 in the short run?
Look, I think Joe is spot on. Cash flow was what this company needed. They produced that. They got growth in there. They simplified their businesses. They got out of a lot of the other businesses. Now the question is growth. And can they grow? What I like about this stock also, it's not just domestic, it's international. So they have that flavor as well. And I think, again, I'm going to go back to the halo effect that Tesla does when they do their own self-driving cars and the taxis. If Uber gets a piece of this business, that adds to that as well, because they're also the brand that people know.
Right.
So if you're going to go and you're going to go to be a loyal Uber subscriber, and they've done very well with that too, I think. But again, this is a growth stock. This is now a momentum stock. It used to be a deep value stock in the 20s and 30s when nobody wanted to touch it, et cetera. And now it's got the momentum behind it, so it has to show execution.
Self-driving. I'm just not on board. I mean, I just don't get it. Freaks me out. But anyway, let's move on to QXO. This initiated outperform with a $33 target RBC. I mean, Joe, they had I'm sorry, is it Joe's Weiss, though, of this one? Had a lot of good things to say here at RBC, building products distribution. They really like this, and the healthy capital structure, attractive currency, cost of capital. What do you think?
Well, first of all, if you look at a chart, you're going to see the stock is down 80% year to date. So ignore the chart. That's before Brad Jacobs got involved. When Brad Jacobs got involved, he priced the pipe at $9.14. So that's really where the stock, for this generation of the stock, should be judged. Look, Brad founded United Rentals. If you owned it from when he founded it to now, that's a ridiculous return your capital, right? Over 100 times. GXO Logistics having some tough times now, but that's been doing quite well. That was spun out of XPO Logistics. So the value created there, and RXO. So look, he's definitely a wealth creator, a sizable wealth creator, in addition to the private companies that he had and the waste management company that he started, which he sold for a major major gain as well. So this is a consolidation vehicle. His playbook is the same here as been with all those other companies. Find industries that are grossly inefficient, that have lagged in putting technology into their operations, and then consolidate those that are lagging and let the synergies take you higher. And that's what's happening. So I bought Beacon Roofing, tried to buy another large company, but stayed very disciplined in price. If you've met Brad, he's when I go to have lunch at his office, they order lunch from me, and he brings a Tupperware container with lunch from home. So he's frugal, but spends where you'll get a great return, and that's what QXO is going to be. So this is going to be a company that's going to have $10 billion in sales over the next decade or so. So it's a permanent compounder. So you just want to stay with it.
I need your help keeping track of all those acronyms with the XOs, hugs and kisses.
They're all listed.
So we don't own this one, but we own XPO, RXO, and GXO, and we're big Brad Jacobs fans. We just haven't gotten into this one yet, just because we don't really know exactly where it's going. But we've owned his stocks for a long time, and if you've been a long-term investor with him, now the stocks do get volatile, as we know. But
that's where you make some money.
But he has created so much value for shareholders over time.
Very interesting one. We got to move on. We're back with final trades. Sarat, you get to kick us off.
Morgan Stanley, great earnings. Stock didn't do much. It's digesting. I think the future for Morgan Stanley, especially if you have M&A growth coming, is going to be really good.
Weiss?
Netflix, that was my final trade on Friday. It's my final trade today. Unfairly penalized for the quarter, and I still think it's a good opportunity.
And tomorrow, the day after, and the day after.
Not today, though.
Amy?
Not today.
Cognex, this is an unloved stock. It hasn't worked for a long time, but if we're going to have a CapEx manufacturing cycle in the U.S., it's going to work.
And Joe?
Big decline in EQT, down 8%. Sell half the position, put it 48, stop on the remainder.
Four good ideas, four very different ones. That does it for halftime.
Hello, welcome to Blue Cloud Trading. Hope you all had a good weekend. It is Monday, July 21st. It is 5:53 p.m. as I'm recording this video. And in this video, we're going to go over the index ETFs. We're going to take a look at the stocks that they just talked about in today's episode of the Halftime Report. Not all of them. I've got about a list of 15 stocks right here that they talked about, including Netflix. We'll look at some of the Mag 7 stocks like Tesla and Apple, as well as a couple of member requests. Let's get started here by looking at the indices. Just let me fix this here. There we go. How did they perform today? Well, as you can see, the Dow was actually up most of the day, and then around 1 p.m. it started to go sideways and drop. It was actually down 0.04 at the close today. NASDAQ gapped up in the morning. It closed up 0.38%. S&P 500 gave up a lot of that, so it hit a new high up in these levels, and then it started to drop towards the end of the day. It was up just 0.14%, and the Russell 2000 down 0.40%. How about the heat map? Let's look at that real quick. And you can see Google was up. Okay, we have Meta up, Amazon, Apple, Broadcom 1.72, QCOM was up. NVIDIA was down. A lot of the healthcare stocks like Eli Lilly and AbbVie were down. What about the sectors real quick? Let's look at those. And you'll see that the communication services and basic materials were the top performers today, and industrials and energy were down. All right, well, let's get into the stocks now. We won't spend too much time here. We're using the Ichimoku indicator. If you guys are not familiar with this indicator, check out one of the most prior video. On Friday, I went over, I did go over this. And you know what? I think I'll add a little tutorial at the end of this video, along with ways on how you guys can become members if you're interested in more content that I create just for members. And that will all be at the end of the video. All right, so let's look at the S&P 500. The SPY all-time highs, right? But up just 0.19%. Not a big move here. QQQ ETF up 0.52%. Still moving up. Looks very strong. By the way, I've got these flagged with a blue flag because they're strong on both the daily and weekly charts, okay? Meaning that price is above the moving averages and the Ichimoku cloud on both time frames. If that the case is if that is not the case for any of these stocks or ETFs, they won't have that blue flag over here. So here's the Dow Jones. Now this one also priced above the moving averages, above the Ichimoku cloud. Problem with this one is that it's still stalling at that 451.34 level, this prior high. So, I think SPY and the Qs are a little bit stronger here. FEZ, Euro Stocks 50 ETF, kind of stalling at this level of $60.61, but it is still above the moving averages and the Ichimoku Cloud and still moving up. Bitcoin dropped a little bit. Let's look at the daily chart here. You can see the symmetrical triangle, all right? And it closed under that on Friday. I said, like, hey, if price gets under, then expect it to drop a little bit, maybe find support of the Tenkan. If it gets above, then expect the continuation to the upside. Well, it's dropping a little, down 0.52%. Nothing major, though, okay? Nothing to be overly concerned about. If you look at the weekly chart, it's just pulling back slightly here. Russell 2000 on the daily chart looks relatively strong, except for the fact that it did have a down day today. But it's been kind of like just building a base, right? So it's just kind of stalling in this little box that you see right there. So I don't know. It's just, I think it's waiting for the August 1st data on the tariffs. All right, not so much. I don't think the earnings are going to have as much of an impact as that August 1st date. So that's what the Russell 2000. And plus, you also need to wait for the Fed to maybe make some cuts as well, right? And so once that happens, that's going to also allow the Russell to flourish. The VIX up a little bit, up 1.46%, but in very in a good place. It's between 18 and 16. You can see that little range right there. So as long as it stays in these levels, that's good for the market, actually. It represents volatility. All right, let's get into the CNBC stocks. XLF, it's above the Tenkan, above the Kijun, looks good, but did drop down 0.29%. But overall, I like it. Broadcom, too. Broadcom actually happens to be one of the stocks that is in the portfolio. I don't mind sharing once in a while some of the member-only stocks that I hold in my portfolio. Right now, there's over 40 stocks that are in the portfolio. So if you guys are interested in finding out how to access and to see the weekend members only video that I posted, consider becoming a member by hitting the subscribe plus button after you've subscribed, and then there'll be a little box there. There'll be some information at the end. But anyway, this one's looking pretty good. It's I had a position back here on June 11th. I also had, and then closed out on June 30th for a 9.1% return. And then I added it again on July 9th here because it started to show some strength. And it's up over 5% right now. LRCX, Lam Research Corporation looks good. Look at that beautiful uptrend right there. And it still looks good on the weekly chart as well. Okay, what about KLAC, which is KLA Corporation? Still very strong uptrend on both the daily and the weekly chart. SMH, strong uptrend still. Okay, we got a few negative candles here, but nothing to be concerned about. Morgan Stanley still looks pretty good. This was Surratt's final trade. It pulled back a little bit here, but that you can see that candle right there is very bullish, and you can see that it's moved up a little bit since that point. Netflix. Okay, here's another one that is actually, this was Steve Weiss's final trade. It also happens to be a stock that I added last week, right before the earnings announcement. And when, Netflix did really well in their earnings, but for whatever reason, the price dropped. Here's the good news. It is stalling at the cloud right here. It's not a major breakdown. In fact, the stock recovered up 1.99% today. So the fact that it's bouncing off this level is showing me there's a good potential that we might, after this little pullback here, we might see a break above again. But I'll wait and see. We have to take a wait and see approach. AMD, Advanced Micro Devices, pulling back, but looks pretty good, except for the fact that if this is a daily chart, if on the weekly chart it is inside the cloud, that's why it doesn't have a blue flag here. What does that mean? It just means that, well, you're not going to have as a high probability trade when you don't have both time frames confirming the trend. And here, Workday, you can see weekly chart, very bearish. I'd stay out of that one. CRM, same thing. Okay, that's Salesforce on the weekly chart. ASML, under the Ichimoku Cloud, no on that one. QXO, also under. This was Steve Weiss's final trade. It does still look good on the daily, kind of. We did have a negative crossover here, but it's holding up above this prior low. RXO on the daily is above the Ichimoku, but on the weekly chart, it's under the cloud. I'd stay out of that one. CGNX, also very bearish here, downward trend under the 200-day on the weekly. Here it is on the daily, finding resistance at the 200. EQT popped down into the cloud, finding support at the prior low over here. So there's a good chance that this one actually might potentially bounce. The fact that it found support at a prior level of support right there, okay, so here it was a low, it found support there and bounced. Here it stalled. All right, so we'll see. Now, I don't like the negative DI crossing above positive DI, but yeah, there's a big drop today, down 9.55% for EQT. Let's look at Tesla. Tesla on the daily chart. Okay, it basically, what's interesting about this one is it gapped up in the morning. You can see that gap up to this level, but then by the end of the day, it dropped and was down 0.35% under the Friday's closing price. So this one has been pretty weak since it's inside the cloud still. You can see that right there on the weekly chart. Apple is also stalling under the cloud. Once again, isn't that kind of interesting? Like I've said before, the cloud can be a very strong level of resistance when price is underneath it. You know, it's kind of like a, you know, ice at the top, and breaking through that ice is going to be necessary for the, you know, to get some oxygen so it can take off basically. All right, now let's look at the stocks from our members. We got PAAS, which is Pan Amer Silver Corp, Pan Amer Silver, basic materials sector. Here it is on the weekly chart, moving up. Okay, it looks pretty good. Looking very strong on the weekly chart. Let's look at the daily chart. On the daily chart, it had this little pullback. Okay. Remember, a stock never goes straight up. It just doesn't. It's the way that, you know, it flows, right? The ebb and flows. And so it's pulled back. Now it's finding some, it actually gapped up today. Had a nice day today. You can see that it gapped up and actually broke right back above Tenkan-sen. This is actually very strong, a strong bullish sign. The positive DI crossed above the negative DI. And like I said before, the fact that the weekly chart is still a very strong chart tells me that there's a higher probability that this is going to continue to move up. Okay, it was up 4.91%. TDG on the daily chart has pulled back a little bit. We got a shooting star, but it's relatively close to the Tenkan-sen. So when I see reversal candles in there that close to the moving average, I don't put as much emphasis on the reversal happening. And if it does happen, okay, you're going to see it the next day and it's going to drop, and that's going to be more, the 9 period, the green line there is going to be more significant if it gets a break under it. But it was down 0.85% today. That's TransDigm Group, industrial sector, aerospace, which is a strong sector. I've got a number of stocks from the aerospace defense sector in the portfolio. TDG, you can see here, is looking really strong here on the weekly chart as well. Okay, very bullish. And guys, this is going to be a short video today, but hope you enjoyed it. Stick around to find out, to learn a little bit about the Ichimoku indicator that I just talked about, and to find out how to become a member. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit. And that's where you'll find it, right here and there. Okay. So that's how you can find it. And if you guys like the, you know, the videos that I'm producing here on the channel, and you want to support the channel, one of the things that you can also do is when you're on the home page here, you can click on the subscribe button. All right. And then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce, and I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend, and that's really important because we're looking at the best stocks, you know, that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one is you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back.